I want to talk about the Fed and the broader economy. Joining us to do just that is John Taylor. He is professor of economics at Stanford University and senior economics fellow at the Hoover Institution. Of course, he's a former undersecretary at the Treasury Department. And John, let's talk about the Taylor rule for just a moment. Part of the Taylor rule is that when you've got inflation that is above target, the Fed should be raising rates. They have done a lot of rate raising lately. We haven't gotten inflation back to the target. Do you think they need to do more, or is there something of a lag effect? Do you think they should have a pause this time around?
I think they need to do a little more. They caught up quite a bit. They're only 0.5 for quite a while, and they're a little bit above 5. But a little bit more would be better, a little bit safer, and I think other people are arguing that as well. The Taylor rule is one way to look at it, as you mentioned. Thanks for doing that. But there's a lot of publicity recently about that. But I think a little bit more would be better.
A little bit more meaning 25 basis points, 50 basis points, or is it data dependent, as the Fed has said?
It should be around 6%. 6%. So that's three quarters. It's a little bit more. Some people are talking about that, but that's what the rule would say at this point.
So where do you think we stand in the economy? How are things measuring up?
Well, the economy is a little bit slower than we'd like. There's a lot of things that are going on. I think this is monetary policy, just part of it. You got fiscal policy, you got regulatory policy, you got international policy. So it's all part of the picture. But I think a better policy would lead to stronger growth, and that's what we should be aiming for.
When you first came up with the Taylor rule, you weren't dealing with stuff like the pandemic that we've just been through. Problems with supply chains, kind of unlike anything we've seen before. But the Taylor rule still stands pat because it's the tools that the Federal Reserve has to work with, right?
Well, they've been focusing on a lot. It's in their report now. They took it out. They put it back in. And there's always debate. They all know about it quite well. It's also international. A lot of other central banks know about it. It's a guideline. It's when they get too far away, as they were a year and a half ago, there's some problems that are persistent. And it's good to get back on track. They're close. They're not all the way. And I must say, other central banks have a ways to go, too. Inflation is quite high in Europe and Japan and even Latin America at this point. So it's more of a global issue. And I think that this idea of a so-called Taylor rule, it's 30 years old, believe it or not, even longer when you look back where it came from. It's there.
Let's talk a little bit about monetary and then fiscal. So the monetary is what the Fed can control. Fiscal is what Congress and Washington have to be dealing with. And we've just seen this debt deal come through. Potentially, Congress still needs to vote on it, still needs to be signed into law. But what do you think of the contours of it at this point?
I think it's good that they got an agreement. It was a struggle to get there. We didn't want it to blow up. So that's good. We'll have to see the details, have to see what's going to go on. But I think there's a little action on the Fed's part, which basically is there, keeping it straight. But the main thing is fiscal policy. And there's some, as you mentioned, there's some things that are part of it. But the main thing is to get the deficit down and have it in a way, as your chart shows, it's substantive. Well, so I think to some extent it looks like a good agreement. It's not perfect, but it's what we could expect for at this point. And I think it's fiscal policy doing the right thing as well as monetary policy.
What would you like to see more of?
I'd like to focus some more on the regulatory side. It seems to me we got monetary policy is moving in the right direction, needs a little bit more. Fiscal policy move in the right direction, needs to do a little bit more. But what about regulatory policy? A lot of issues there. That's always been a very important part of what we're doing, and there's very little discussion of that, mostly monetary policy and fiscal policy, but the regulatory part is good. Also, let me just mention international. It's not just the United States, it's the rest of the world, and to some extent the rest of the world is a bit behind the curve too. We got trouble with Europe as well as the UK.
John, do you think the dual mandate has outlived its effectiveness?
Well, I think it's important to pay attention to inflation. That's part of the dual mandate. It's also important to pay attention to inflation, to unemployment, to the state of the economy. That's part of it. You know, the so-called Taylor rules always had these two factors. It's surprising to people that just those two matter so much. And it's worked in other countries as well. I think the thing is that when you say dual, it's really inflation and some measure of how the economy as a whole is doing.
I don't know. I think an argument could be made that if you have price stability and dollar stability, let the private sector generate the employment, just leave it alone and let it go. You can't do both. A lot of times you try to satisfy both and you end up satisfying neither, or they're mutually exclusive, the things that you're doing.
Well, it's only two variables, not so hard. You have inflation and you have the state of the economy. It's, some people used to have 20 variables. This is only two. And so it's a lot simpler. I mean, what's so hard about two? You don't want the economy to go down the tubes. You want to accelerate too much. So that's another measure, if you like, of how the economy is doing. Inflation is part of it, to be sure. Inflation's too high now. They haven't given up that 2% target, which is good. But you don't want to just let the unemployment rate go hog wild anywhere it's going to go.